Look at the global cues from last night. The US finally rebounded post 5 to 6 consecutive sessions of losses. At one point, the Dow was up over 600 points, the Nasdaq was up 2%, the S&P was up nearly 2%. It looked like a very euphoric day and definitely killed the largest fall which we saw on Wednesday in 3 months. However, by the end of the session, some of that euphoria tapered off, and the Dow, S&P, and Nasdaq all finished with muted gains. The Dow was up 300 points, or nearly a whole percent. S&P was up 0.98%, and the Nasdaq was up 0.50%. Now, futures this morning, unfortunately, have taken a bit of a negative dip for us. Dow futures are down 100 points. S&P and Nasdaq futures are down around 0.2% each. So we'll be looking to see how our equity market responds, but the SGX as of now is showing a 140-point uptick at open. Asia's quite positive this morning. Also, Biotech, Novavax vaccine seems to be 89% effective, so that's cheering up global equity markets. Japan's Nikkei is up 0.30% in early trade. Topix is also up 0.2%. Then if we look at South Korea, the Kospi is up nearly a whole percent in early trade. And then Australia is also up with the S&P ASX up nearly a whole percent. So we've seen a sell-off in Asia over the last couple of days as the US sold off. That seems to be kind of making a comeback today as well. European shares yesterday closed slightly higher. The stock 600 was up just 0.1%, but at one point it was up nearly 2%. So that just gives you a flavor for how excited markets got yesterday worldwide before they cooled off slightly. Travel and leisure stocks were the best performers, 1.3% gaining in Europe, and telecom stocks fell 2.2% to lead your losses. Now, two commodities we check on, oil and gold. It's of course very important to understand what's happening there. Oil prices actually fell yesterday. Now, that's because the weaker dollar impacts prices always. And Brent futures fell 27 cents, or 0.5%, to $55.54 per barrel. And US WTI crude settled 51 cents, or 0.96% lower, at $52.34 per barrel. Gold eased on Thursday after the Fed commentaries made investors nervous about the slow pace of economic recovery. So spot gold fell 0.2% to 1841. On Wednesday, it had fallen to the lowest since Jan at 1830. These are all per ounce prices I'm giving you. US gold futures shed 0.2% to $1840 per ounce. So gold feeling some pressure over the last couple of days for sure, but it tends to act as a hedge to equities. Whenever equities majorly underperform or experience mass volatility, people seem to flock to gold. So let's see, maybe that'll happen. What's happening in the US is there's a short squeezing of hedge funds also happening by retail investors on platforms like Robinhood, and that's causing a lot of panic in that all these heavily shorted stocks like AMC, Nokia, GameStop are all up, some as high as 1,000% in the last week. So that's what spooked Wall Street a little bit. They seem to be digesting all of that now, and we seem to be getting into a more kind of steady market rhythm with stable prices.